I am going to invite now the first presenter who is going to present us on CIS or Collective Investment Scheme. Ms. Hanna Tedla is a senior capital markets legal advisor Ethiopia on CME or capital market. Please allow me for her to present. You will have 15 minutes and 5 minutes for questions.
Thank you very much for that introduction. Happy anniversary to Hibrat Bank. And Dr. Gammachu, congratulations on a wonderful event. My name is Hanna Tedla Teshome. I am a senior legal advisor at the ECMA. And today you've heard about almost like the big bang for capital markets that's happening in Ethiopia. We have the regulator coming up now, we have the exchange, and we also have the CSD all coming up at the same time. So my focus obviously is going to be from the regulator. And I wanted to highlight one of the biggest tasks that we've been focusing on thus far is really about building out the regulatory framework. We do have legislation in place by way of the proclamation, but there's a lot of subsidiary legislation that needs to be written in order to really operationalize and bring to life the capital markets that's envisioned in the original legislation. So thus far, the ECMA has made public or has put into effect the regime for licensing capital market service providers. So it's the investment banks, the investment advisors, all the various persons that undertake capital markets activity, the license for those persons. You've heard about Ethiopian Securities Exchange. Obviously, that's a key piece of infrastructure. So you'll hear that from the other horse who will also be speaking. So it's not just one horse speaking today. You've heard about the CSD, and the CSD being the clearing and settlement system, another key piece of infrastructure that's going to need to take place. Separately, we've heard a lot about disclosure and transparency. And that actually is covered by a directive that we have on public offer and trading of securities. A lot of disclosure and transparency issues are embedded in that. So what I'm talking about today is collective investment schemes. And the only reason I am talking about all those other directives is because all those other things are important and are relevant for the CIS or the collective investment scheme framework that we are currently developing. So CIS, some people call it investment funds, some people call it mutual funds. Private equity firms are collective investment schemes, venture capital funds are collective investment schemes. So this is governed and regulated in similar ways in many jurisdictions, but also in very many different ways because there are nuances in each jurisdiction. So what I want to highlight is just some key takeaways that I would like you to have today. Number one is just to appreciate what collective investment schemes are, and then also to really understand why we want collective investment schemes in the Ethiopian capital markets ecosystem. I think it's suffice it to say that collective investment schemes really have an important role in economic growth and in the entire development process. I think this is only appropriate also to talk about how to get ready. You know, what is needed to start collective investment schemes in Ethiopia. So we've talked a lot about human capital. So there are some skills required, technology, which is the systems and the processes by which you undertake any kind of activity, and then just understanding it from all of the various business leaders. What collective investment schemes can mean to your businesses. So basically, what kind of additional revenue line can you generate by the introduction of collective investment schemes? Briefly, a collective investment scheme is not an ordinary company, it's an investment vehicle. Okay. There is a precise definition, actually, that we have in the proclamation as to what a collective investment scheme is, and I think it's almost identical in many jurisdictions how it's described. And essentially, it's an arrangement, and we'll talk about the legal form that this arrangement has to take. But its purpose and effect is generally to enable people to participate in profits or income from investments, and these investments would be securities or property more generally. Most importantly, it's a professionally run investment vehicle. So the regular investor does not have day-to-day control over it. Now, this doesn't mean a complete absence of control. There is still a right to vote. But generally speaking, a collective investment scheme is run by the investment policy that it's created by. So if the investment policy, which we'll talk about, is a key governance tool, it basically sets out what this investment vehicle is going to do. So if it says it's going to invest in a certain type of security, a certain sector, that is what it's supposed to do. And shareholders thereafter will have a right to say something vis-a-vis the investment policy using general company law provisions. But when we say professional management, we are talking about a capital market service provider that's going to be providing this management service. This person is a collective investment scheme operator. That's the name that's been attached to it. So in other jurisdictions, it might just be a fund manager. In the US, it's an investment advisor. There are different names to that. But essentially, the person who gives the professional management services to a collective investment scheme is always a necessary party, and that's the collective investment scheme operator. Separately, I think it might have been David that mentioned about custody business. There's another important party to the collective investment scheme. The second professional party would be the custodian. So the assets are not held necessarily by the investment vehicle, it's held with a custodian. So this is just to say that some key things are necessary before you have a collective investment scheme. First and foremost, you need to have an underlying investment. So there are certain sort of collective types of arrangements that don't fall to be considered collective investment schemes. So traditionally we have uqub and iddir, so in the traditional sense, so there's some that have busted their seams and gone to do other things. But the traditional sense, these are savings clubs or sort of insurance policies in the case of death. Those are not the kind of things that we're looking at when we talk about collective investment schemes. Nor are we looking at the public and the private sort of pension funds, who are really legal establishments that may have their participants invest in collective investment schemes. Similarly, I've put there property, timeshares, and franchise agreements. But the main point here is that a collective investment scheme seeks to make money from property or securities in a passive way for the investors. I want to just briefly highlight the reason why we want to have collective investment schemes before I just delve into some of the challenges and issues that we have, or that we will be solving, I should say, with the directives. First and foremost, we do hear a lot about financial inclusion, and I'd say that this financial product is really a key way of bringing that about. Some people talk about collective investment schemes democratizing access to investment products. And in many ways, that's what it can do. So basically, you're giving many more people access to the capital market. So we'll talk about that in a little bit when I show you a little screen there, a little chart. But as a whole, it's because it expands or diversifies the number of people that can participate in the capital markets that we look at it as also being a key financial inclusion tool. Obviously, there is also that professional management that's embedded in collective investment schemes. So that means the person who is not quite as literate in financial matters can actually rely on this professional to give them that sort of guidance in terms of shaping their investment choices. We'll talk about why there is also a wide investment selection of investments when we see the chart. But ultimately, another key benefit to collective investment schemes would be the economies of scale that it generates, because frankly, when you do things in a group, you're going to have cheaper costs. So it's the sharing costs, the lower transaction costs, all of these are wonderful benefits of collective investment schemes. Now, ultimately, what a collective investment scheme does is take a wide amount of capital, a large amount of capital, and put it towards investments in securities, in real estate. So that whole process by which something goes out of my pocket and then goes to the person that actually needs the money and was going to use the money, that's the notion of mobilizing capital. So we'll see that collective investment schemes are a real way of moving capital from those that have it to those that need it, ultimately that is the purpose of the capital markets. Now, this little chart of different colors, green, orange, and blue, I use this chart just simply to give a little picture of what I'm going to say, so I don't use my hands too much. But what we have is the investor, me, I have cash. I'm going to give my cash to this orange person, the scheme. We'll talk about what that scheme looks like. But basically, I give my cash, and instead, I get a security, a CIS security. So the same way you would a share. But what does the scheme do with the money that I've given it? The scheme will take that money and then invest in that, whatever investment is based, that investment policy has articulated. So it could be the top 25 shares that are listed on the Ethiopian Securities Exchange, so all listed shares. It could be 25 unlisted shares, so it could be like a VC fund, because the venture capital funds tend to invest in these, they get shares from small and medium enterprises. They may not be listed. It could be a series of bonds. There's no reason that it has to be a share, because we said it has to be a security. So it could be a bond fund. So it could be an amalgam of corporate bonds, or even series of different kinds of treasury bonds. So, it could be that. Could be a combination of that too. It depends on what the investment policy is and what the shareholders what the CIS securities holders have agreed to. Separately, could also be property in the real sense, real property or real property. So when we look at that, in many jurisdictions, that's what they call a REIT, a real estate investment trust. Now, there are many different ways that REITs are organized in different countries. Sometimes it's driven by the tax legislation as opposed to the capital markets legislation. But ultimately, there is an asset that this entity owns, real estate that this entity owns. So there's this question, in some places, they would require that property be income-generating property, so you get money from the rental incomes. In some jurisdictions, it's about developing that real estate, and then after that, having the profits from that development. So there are many different issues to consider when we talk about that blue dot at the bottom, the scheme's portfolio of assets. So we know that the assets will be securities or property, but as we build out our regulatory framework, that's one of the things that we'll be looking at, exactly what goes into that pool of assets and what's the combination of those assets that it needs to be. Thinking through whether something is listed, whether it's unlisted, whether it's marketable in any way, how quickly can it convert to cash? That's one consideration. Then as we move up on the left side, think through the orange box, the collective investment scheme itself. I mentioned real estate investment trust, and the key word in that phrase is the word trust. Many jurisdictions use a trust structure, which is very common in common law jurisdictions. But not every jurisdiction has that. But a lot of times that box there is governed by the country's own sort of legal framework in recognizing legal entities. So we're working within that to establish what kind of legal form is appropriate for a collective investment scheme. We know for a fact that it has to take a legal form, that is a fundamental element of international best practice. So we'll be looking at what organization form the collective investment scheme will take. And then most importantly, it's about who the investors are. When you are looking at the retail investor, I hope there's nobody named Abeba in this room, because I always talk about Abeba. Abeba being the average Abeba is what I try and say when in the French context, you say, John. So that's what I say, the average Abeba, but sorry, Abeba. But the idea being that, there's the general public, and then there's the educated not educated, pardon me, the more qualifying population, the ones that have the wherewithal to either deal with financial loss or have the wherewithal to understand the financial risk. So there is an investor differentiation that we need to take place. So what we're balancing ultimately is mobilizing capital, but at the same time making sure that investors have the right kind of protection that they need. So all of this is what we have to take account as we're building out the regulatory framework for collective investment schemes. So as you know, our starting point is always the proclamation, and the proclamation has a very clear how this is supposed to be structured, very much in line with international best practices. So the notion of a collective investment scheme in and of itself is a regulated activity, and that regulated activity, as I mentioned, has to be done by one that has the appropriate license, that being a collective investment scheme operator. Collective investment schemes have to be registered with the ECMA. So this registration process is slightly different than registration of securities, which you're supposed to register before you undertake a public offer. This is registering the scheme itself, the fact that this has been collected and is being collectively managed, and thereafter, depending on whether you're offering it to the public or whether you're offering it to those very qualified investors, there'll be different sort of levels of documentation and disclosure and transparency that will be warranted. Again, looking at that person's wherewithal. So there is that investor differentiation that will take place. Now, the directives that we're writing, we've actually been instructed, the ECMA has been instructed by the proclamation to make out directives addressing the types of schemes that we're going to recognize, and also the disclosure requirements that are associated with each of those schemes. So the other key points that we're going to have to address along with that, the legal form. So is it a share company, is it a partnership, or is it a variable capital company, which a lot of non-Ethiopian collective investment schemes tend to follow that sort of variable capital notion, which is what a trust does ultimately. We'll talk about also some of the rights that investors have, particularly when we're talking about the more nuanced types of legal forms, the variable capital forms, and any restrictions that come along with that. Inevitably, we're always asked, quickly, okay. So we're always asked, how do you go about building your regulatory framework? I just want to point out that there is a systematic approach that we use to building out the regulatory framework. First and foremost, we start with the proclamation. We look at best practices. We look at IOSCO. We look at our objectives. We look at our comparators, our benchmarked countries, and then ultimately we tailor that for Ethiopia. And actually, one of the points to make on benchmarks, just recently, I think 4 days ago, Kenya just updated their CIS regime vis-a-vis offerings done to qualified investors. So not to the general public, but to qualified investors. So it's good to see a lot of familiar elements in that directive. Just to highlight here, CIS is a professional investment vehicle, so good governance is absolutely essential, investment policy being the key governance tool, and obviously the use of service providers contributes to that. I want to point out some of the key essential service providers, that being the operator and the custodian. There are other optional service providers, primarily the investment advisor or the Sharia advisor. So an collective investment scheme can be Sharia compliant. Valuation providers, these are appraisers in our regime, also very necessary people. Ancillary services that come along with CIS, fund management, fund administration, these are all very important elements, and I think it goes with some of the concepts that we've been talking about this whole conference, about partnership and working together. These may be key points where we could leverage from partnerships. This is just highlighting some of the related directives. I've already spoken on that. And I've already spoken about how we've generally tailored or working towards tailoring our directives. That it needs to be flexible, it needs to be encompassing, it also needs to be enabling. We also need to be cognizant that we're starting from scratch, essentially. But last point, when we do issue the directives, it will be made available for public consultation. I think there was a gentleman yesterday that was harping a lot about the fact that consultation was necessary. And I absolutely agree with him, consultation is absolutely necessary. So when this directive does come out for consultation, we would really appreciate your input, insight, knowing the points that I've already just mentioned, that we did look at benchmarks. But please, your comments, insights are very important and helpful. But let me just leave this. Think through what you can do in this space. What kind of steps can you take to prepare for collective investment schemes, whether you as leaders can actually engage in collaborative relationships or partnerships, or whether, just think about them. Think about how you can actually increase your revenue lines. There are many ways to think about collective investment schemes, and hopefully you won't fear them. Thank you very much.